Welcome to the Daily Exchange! Guys, we're back. We're here. We're talking about Plenti. It's an incredible digital lender, digital investment platform. We've got Daniel Foggo with us. See you guys right after this. All right, guys, we're back. We're here with the CEO and founder of Plenti, who is listing on the Australian Stock Exchange. Incredible stuff, a digital lending and digital investment platform. Welcome, Daniel, to the Daily Exchange.
Thank you, Fred. Pleasure to be with you.
Daniel, you are obviously the founder, so you've been there from the very beginning. Tell us, in your words, what is Plenti?
We're a technology-led lending and investment business. So we fund loans for personal loans, renewable energy loans, automotive loans, and we allow mum and dad investors to invest in those loans, along with a lot of institutional investors and our own balance sheet.
Awesome. And where did the idea come from? Give us the story.
Well, basically, I really looked at the Australian consumer finance market, characterised by really wide spreads relative to other developed markets, a relatively concentrated market, small number of players, and then a lot of the incumbents were really, they had legacy technology platforms. Always saw an opportunity to build a business of real scale by investing in technology, and that's the path we're on now.
Awesome. And I guess, in the beginning, you guys were sort of I thought like a peer-to-peer lender, and there were a lot of products out there. There was sort of a bit of a trend, in the US, I think,
Lending Club.
Or a lending club, and there was a few others obviously coming out to market. And now, tell us about the makeup of the loans and makeup of the lenders today.
Look, absolutely, we did start life as a peer-to-peer lender when we launched at the back end of 2014. So we exclusively funded loans from mum and dad investors. But very deliberately, we've diversified our funding base. So that started with SMSFs investing via different platform partnerships, some fixed income funds. We've had 8 different banks fund loans. We've had a superannuation fund, I think the only sort of corporate superannuation fund funding a fintech loan book. And then the government via the Clean Energy Finance Corporation. And then more recently, our own warehouse to fund secured automotive loans. So we've always seen value in having a really diversified, funding base, but absolutely core to our heritage and core to our future is having those retail investors sitting alongside us or working with us. It's very core and dear to our hearts to make sure we're opening up what is a really large asset class, which is consumer credit, not just to institutions, but also to mum and dad investors.
So tell us, who is your core customer for Plenti on, I guess, both sides?
Yeah, good question. You've really got to break it down by lending vertical. Now, automotive finance, our average loan is $32,000. The average customer, about a third are buying a new car. And so, relatively high income, pretty normal car buyer for that sort of car value. Renewable energy is typically, homeowners for one. They're generally people who care about the environment. They're also looking after their own balance sheet, and ordinarily or cash flow, if you like. Ordinarily, when you buy renewable energy equipment, you're actually saving money on a monthly basis. You're just displacing a utility bill for for a finance payment. So, the average income of those customers is around $90,000. As I said, homeowners, relatively small loans, so tends to be really good from a credit perspective. And then personal loans, quite hard to categorise in one sentence. We fund loans for a really broad range of purposes. The important thing is, we're really focused on the sorts of customers who can get a loan from a bank. They're just looking for better value, and they're looking for much better speed and convenience as to what they might get elsewhere. So we're not really trying to reinvent the wheel in terms of the customer base. It's really just being more relevant to the customers we're really wanting to be funding.
Now, I guess let's go a little bit further into the business itself. What sort of, drives the business, I guess, in terms of net interest margin, for example, because that's obviously a key factor whenever you're lending money. How do you sort of maximize that?
Yeah, look, good question. There's always a trade-off between, offering really good value and building scale, which is what we've been all about. So the way we see it is if we look after our customers, they'll reward us, they'll come back to us, they'll talk to their friends. So if I look at our NIM, if you like, it might be lower than some of the incumbent lenders, but our business is all about utilizing technology to be really efficient so that actually we can not just reward our own customers, but also our shareholders. So that's one of the reasons we're listing, and that we're at the state now where we're confident around the operational leverage in our business. We think we can deliver for all stakeholders in that regard. And our prospectus shows some financials which show the trends that are really encouraging in terms of those cost base coming down relative to revenue.
Yeah, definitely. And so with your in the financials we looked at, you can see in the numbers. When do you sort of expect, I guess, Plenti to be profitable?
Good question, and a reasonably regular question. Look, we're raising $55 million. Importantly, no existing shareholders are selling down. This is all new capital. Our existing shareholders believe in where we're going. And the capital we're raising, around half we expect to put into warehouse type facilities as we grow our loan book. And we anticipate or expect that the remaining amount of capital that we're raising is sufficient to bring us to profitability. Now, clearly, as a business with lots of growth opportunities, we'll continue to evaluate over time what we think the right thing to do is invest more heavily in growth. It's worth noting at the moment, over a quarter of our staff domestically in Australia are focused on technology and product and growth projects. So that's very much how the business is geared at the moment. It's about making sure we're growing strongly. Our revenue growth over the last 2 years, the CAGR is sort of 60%. The loan book growth to our forecast period of the end of this month or the end of next week is around 40% over the year prior. So that's what's really important to us. It's about making sure we're really efficient around how we operate our business, but we continue that trajectory of growth.
Now, a lot of businesses have been challenged by the recent COVID pandemic. Tell us, how has that affected your business?
Well, I think, operationally, like a lot of businesses, we all had to start to work from home, all of those sorts of things. I think importantly for our business, it's, how is your credit going to perform? And can you continue to originate loans or lend money to people that you want to in this sort of environment? We've been really pleased on both scores. From a credit perspective, our arrears has performed not dissimilarly to prior years. That's not uncommon for consumer lending businesses at the moment. I think with all the government stimulus and access to superannuation, people have actually been quite responsible in terms of repaying if they're in arrears. Probably what one should really look at to get a sense of how the book's going to perform in the future is, how many of your customers have gone into loan deferral or financial hardship. And on that score, relative to peers, around half, our levels were around half what our competitors or peers were, if you like. So we're really encouraged by that. We peaked at about 3.5% of our loan book, which compares, very well. So we're quite confident that actually, if we have a difficult economic environment next year when some of the stimulus evaporates from the economy, that our loan book will perform well. There's a few other features there. We're relatively underweight the high risk segments. So that's borrowers under the age of 30, casual employees, self-employed people. So you might say we've been preparing for a recession for quite some time. So we're pretty confident around that. And I think that was obviously a key diligence question for investors heading into the IPO. The other one is around growth. Look, through the COVID period, we scaled everything back. In April, we tightened our credit criteria, we cut our marketing spend, as I'm sure a lot of other lending businesses did. But we've been really pleased with the growth trajectory since then. We're expecting a record quarter, the September quarter, in terms of what we've forecast in our prospectus. We've had some really strong months, particularly in renewable energy. We had a number of record months through the COVID period. People are investing in home improvement, and it broadly falls in that category. And then in our automotive finance operations there, it's really years of effort to get to the point where we can really build scale there. And for us, it's about taking market share. So we're reasonably agnostic as to whether that market's growing or shrinking at any particular point in time. So we've pulled back in our personal loan lending or unsecured personal loan lending, but we've really sought to compensate in more in the other parts of our business. So we've been really pleased with our performance. And I think that's, again, why we're sort of confident enough and why investors have got behind our IPO.
Now, Daniel, in terms of growth, you guys used to have RateSetter in the UK. You sold that business to the Metro Bank. Do you have any other plans for international expansion?
Yeah, look, we had a relationship with the UK business called RateSetter. They owned 15% of us for historical reasons when we adopted some of their technology a number of years ago. But actually always been quite distinct businesses. So that has given us an ability to look at other markets over time. Now, I think the key for us is really building scale in the Australian market. There's so much opportunity here. We feel that we're really at the foothills of the opportunity. So I think for the foreseeable future, we'll be focused on the Australian market. You can probably tell by my accent, I'm a New Zealander, so I've always seen some appeal about going across the Tasman at some stage. But I think maybe as a business, the more rational thing is looking at larger markets in Asia. It's certainly not on our roadmap at the moment, but I think we'll always look to do what's in the best interest of our shareholders and what our management team is keen to do at any particular point in time in the future. So the short answer is not on the agenda at the moment, but you never say never.
So normally, I guess, for digital lending businesses, the key is obviously getting funding and getting it cost effectively. And that tends to drive quite a bit of growth, and obviously picking the right loans and who to lend to. But where are those key sources of capital in the future going forward? Where are you targeting? What sort of things going to drive growth?
Yeah, look, I think more important than ever is your ability to offer really seamless solutions, not just for your end customer, but also for the referral partners you're working with. And they may be a renewable energy company that's referring you a customer, it may be an OEM like Tesla, or it may be a loan broker. So we've invested really heavily in that part of our business since we launched. Over a quarter of our staff focused on technology and product. And I think if we wind the clock forward a couple of years, your ability to deliver speed and convenience and really good value to both your customers and your referral partners is just going to be more important than ever. Your ability to integrate with your partners, learn with them, modify your product, your ability to get up into a new vertical, integrate with partners in that vertical are just going to be increasingly important. So that's why technology has been such a focus for us. Even in channels where we might be spending marketing dollars, be it with Finder, be it with Google, be it with others. You want to make sure you've got the fastest, most simple experience for your customer. And that's the way you get them from the start to the end of the journey where they actually draw their loan. And that's just about making sure you've not just got really good technology, but really good processes behind the scenes so that that's all seamless.
So, Daniel, with obviously going public, which is going to be it's a big deal, and congratulations. So super excited, super pumped. Tell us about, I guess, what should investors be excited about? What do you think? What sort of things are coming up?
Look, I think we are a growing company, but we're in really large verticals. If you think of the automotive finance market, that's over $30 billion of originations every year. So that's much larger than the credit card market. We've seen a lot of structural and regulatory and also technology-led change in those markets over the last 4 or 5 years. We've seen a number of different businesses depart, not because it's not an attractive market, but because maybe they can't meet the compliance requirements. They haven't invested in their technology. That's creating a vacuum for a business like ours to build real scale. Similarly, in renewables, there's a lot of change going on there. Some of that regulatory, some of it state governments getting behind programs. We're running one in South Australia with the South Australian government where we're administering $100 million worth of subsidies to put batteries into 40,000 households. We see more of these things coming into that, these sorts of programs coming into the renewables market. And there's opportunities for us there to have real step change and scale in some of those verticals. And then in the personal loan market, it's a pretty continual trend for the market share of the large incumbents, the big four, declining, pretty much year on year. And that is opening up opportunities for businesses like ours to build scale in that market. And these are all really large markets. When we add all of that together, we see an opportunity for us to sustain growth for a very long time. And we think we've got the right technology, the right team, and the right funding coupled and credit capabilities coupled with that to continue on a march to build some serious scale.
Awesome. Now, in terms of just in terms of comparables, Daniel, I know it's not nice to talk about there are other companies in your space, but I just wanted to get we've got businesses like Harmony, Society One, things like that. Tell us what really makes Plenti stand out.
Yeah, look, it's interesting. I think there's a lot of comparables in terms of fintech businesses, if you like. We're quite unique in terms of the diversity we've got in terms of the verticals we're in. And then I think also on the funding side, having over 20,000 registered investors and that diversity of funding, not just warehouses, but government and banks and institutional investors, I think is quite unique about our business. We also, going back to technology, really try to differentiate ourselves and invest heavily in that area. So there's a lot of, businesses that are comparable in one sense or another, but I don't think there's anything that's really got that diversity across the different verticals that we do. And I think that makes us quite unique. When we look at the listed markets, again, nothing directly comparable to what we do. And I think that's, interesting. It means we've got a bit of education in terms of explaining to investors what we do. But I think once they understand the end markets we're in and our points of difference, some of those messages start to resonate.
Awesome stuff. Daniel, thank you so much for joining us on the Daily Exchange. It's been awesome and good luck for your listing. Much success and loving the business. Lots of love as well.
Perfect. Thanks a lot, Fred. Appreciate it.
All right, guys. That is Daniel Foggo from Plenti. Bringing it to the Daily Exchange, guys. Do subscribe. Do follow us. We'll see you guys later. Yeah!